The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another wonderful edition of the Power Trading Hour with your humble host, G. Gordon Liddy. Today is always a beautiful day at headquarters of Technical Trading and Investing, TFNN.com. So, we've got a market here that is moving. Now, the question is, are we going to get the same kind of rug pull by the end of the day that we've had before? We are coming into fund buying. Are they just going to mark this market up just a little bit to make sure that anybody with a IRA gets put in with the highest prices available? Trading out at 1853.42 at the moment. Just 2.1 billion shares on the consolidated New York Stock Exchange tape. So nothing that would indicate that we've got any kind of volume, but maybe it comes in before the end of the day. It's interesting to see so many stocks up on very light volume while we're getting very few stocks with a great deal of volume up here at these highs. But for the most part, not a lot happening out there. Even though we've got an 8-point move in the S&P cash. And we'll be taking a look at that. But right now, nothing really out here making me get all warm and fuzzy about going higher, but that could change in a minute. Today in 1933, less than a week before President Franklin Roosevelt is inaugurated, the stock market forecasts a gruesome future. The Dow Jones Industrial Average closed at 50.16, a new low for the year, and barely above its all-time low of 41.22 on July 8th, so about midsummer. The year before. Stocks are selling at basically 6.5 of book value and 10 times reported earnings if they had any earnings at all. Average dividend yields of 8.7 if they were paying any dividends. Of course, most of the companies weren't. 5 trading days later after Roosevelt's banking moratorium, read that as making Americans get rid of gold and get back into cash. The financial reforms kick in. The market is 23.8% higher by the end of June, and it has doubled. But those really didn't do a whole lot. We did see the lows in 1933, but we got exactly what we have now, which is a actual economy that just doesn't go anywhere. And, of course, it took a world war to get us out of that. And, of course, we're trying the exact same thing again this time. And what a surprise, not getting any traction. But certainly seeing the stock market up. So maybe we can learn from history. Stock market up, economy goes nowhere. But that's interesting. Now, when we look overseas, probably the only thing that I really noticed was that Germany's DAX is off 0.8. I thought maybe we would follow today, but not so much. The most interesting thing, and one of the reasons why I'm not getting all fired up to cover my shorts here, China's Shanghai Composite was up 0.3, but just after that, the Shibor kicked up fairly strongly. That's their bank lending rate, and we'll get to the reason why in a minute. Of course, their yuan is its lowest since the beginning of August, so we've got a fairly decent move for the weakening of their currency. Hong Kong's Hang Seng was up 1.7%. The Nikkei was off 0.3, And this is what is going to be what I'm focusing on tonight. And I'll probably make a decision on whether or not to cover my shorts tomorrow. Tensions are mounting in the Korean Peninsula. North Korea fired 3 missiles or 4 missiles off into the Gulf there. They're pretty much acting as the stalking horse for China, going up against Japan and the U.S., well, the old USSR, now it's Russia, fighting over all those islands just off the coast. And it's got tensions over there. I think it's kind of on the back burner now, but I'll be very interested to see about 10 o'clock tonight how those Chinese markets do open up and whether or not the saber rattling over there spills over into their actual markets. I had a question in the den, or not in the den, actually in an email, which I don't have up now. I need to get my email up. I'll do it during the break. As always, you can email me at path@tfnn.com. And the question was whether or not the market was random or not. And it's pretty easy to go back and figure out whether or not something is random by just looking to see how it would act if it was a coin flip. If we had an actual coin flip, and I've got a chart here on Tiger TV, what would it look like for odds and evens? And I made this chart out to basically 10 in a row, heads or tails. So that's what a chart would look like, and actually did 10 million flips, albeit electronically, with a random number generator that is highly accurate. And you get exactly what you would think, right? You get, for the most part, you're going to get just about you're going to get as many heads or tails if you run the thing long enough. I think I ran 10 million flips of a coin on it. When you start getting out to more than 3 in a row, you really see just how rare those 10 coin flips, either heads or tails in a row, are rare. But this came with a couple of questions. One, everybody on CNBC, as soon as they see 5 days up or 5 days down, it's really not that uncommon. It starts getting to be very uncommon at about 10. But the question is what or if the market itself is random or not. Well, if it was random, you should see the same amount of days, pretty much, that the stock market as a whole or the indexes move up or move down. So what do you get? You get something vastly different than what you would think. And I went back and took every day for the last 20 years in the off the S&P, and just said, okay, is it higher or lower? Is it higher or lower? Now at the top, you should see something like we saw it before, just as many, but you have a far more many days up than you have down. And if anybody's listened to the show for a very long while, you'll know that most of the time, or what I'll say is, the market's always moving up 75% of the time. It's moving down 25% of the time. The thing is that in that 25% of the time, it eats up pretty much all of that 75% up in a real hurry. And that's why shorts like it. Normally, it's a lot of money very quickly. Unfortunately, your timing has to be fairly right because you're going to be wrong about 3/4 of the time if you just did it randomly. So you have to wait for your positions, and even if you get good indicators, it's not going to be uncommon to be wrong when you're short. A lot easier to be right and long, but of course make a great deal less money being right and long. But I'll probably put this together in a paper, but there's pretty definitive proof, especially when you get out to these edges, and I think I zoomed into them. Yep, there it is, right there. If we were truly random, then the up days, especially at the ends, would be pretty flat. They are far more random than you would think. And when you hear me talk about fat tails in the market, this is what they look like. They look fairly close, but when you get to past about 10 to about 14, which is the longest run of either ups or downs I found in that 20 years. And, of course, it could have closed down a tenth and then the next day headed right back down. But when we're looking at the actual S&P, about 14 days pretty much is what you are looking at for any amount of days. But it's especially, let me go back to that previous chart. It is, I think you're off by 5 or 6 standard deviations as to the amount of days that are up to the amount of days that are down. So if the next person that tells you the stock market is random, there's pretty definitive proof right there that it is not. We can also say that a lot of people say that there's a random walk, or what they call the drunkard's walk, that you know where he started, but you don't know where he went. He kind of weaves this way and weaves that way. And some people think that everything works just perfectly according to some formula. I think neither people or neither idea is correct, but you're probably more likely to see exactly something in the middle. It's not as random as a lot of people would like you to believe, and it's not as definitive as a lot of people that would want you to believe that whatever method they have out there works to lick the stock market. Anyway, let's see what else I had out here. I think that's the end of it, other than it's a mad world. There was one thing I wanted to get to while I get a chart up here. I'm kind of starting to see this whole 1%er communist thing getting out of hand. We saw, last week or just the beginning of this week, people graffitiing 1% over people's cars, garage doors, and houses. The last few days, I think it started on Sunday, there was an ad from Walmart where they're going to pledge, $20 billion, $200 billion, whatever, to start production of manufacturing here in the United States. They've already done it with a bicycle company. They're going to do it with other companies that can produce products at a decent price. Started running an ad with the band Rush, if you've ever heard that song, The Working Man. The guy that did the voiceovers, the guy that if you maybe see him on Dirty Jobs or all the voiceover work he does from the Deadliest Catch or all the rest of the stuff, has been getting death threats because he is promoting hard work. And I tell you what, I hear stuff like a senator this morning and other people pushing it, and the ex-head of the House about work is just something you shouldn't have to do, and I kind of cringe. But Micro, decent guy, screw you communists. Blah.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
A lot of stuff checking out these markets. We're up 7 points on the S&P cash. So for the first 20 minutes of the show, we've done about 100 million shares, which is not going to get it done, at least if you believe that in price and volume. My guess is that we could be up here, and they're holding this up to sell into the next few days of fund buying. We'll see just how strong that is. The numbers don't suggest that they'll be able to break this out. At least the trim tab numbers don't. So I'm going to continue sitting on that. Okay. What else do we have? I had a question in the den. Let me get to it here in just a second. If I can get to it. There we go. The question in the den. I got to get my chart back up here. The question in the den was, what does a CRM do, and is it proprietary? Salesforce.com basically is a cloud provider of services, and they do so many things. It's going to be why can't I do a company that does the same thing? Is a cloud provider, and it is. I guess for a better description, they are the IT department for your company and offer those cloud services. They offer programmers, and since so many things in business are the same, you can go to them and they'll set things up for you. They provide specialized software, and if you're running a big ad, we'll say over the Super Bowl, you need a whole lot of servers to handle that traffic on your website for a few days. You just call them and turn it all on. But they offer just about everything that you would want if you were in an IT department. They also have a lot of software that they add on to that for all kinds of things like human resources. Basically, anything your IT department would have done internally or you needed doing, they can do for you, and they'll say that they can do it for you faster and cheaper. And since really for the most part, companies buy and sell things. They have employees. They all have Social Security numbers. There's enough of that stuff that's duplicated that they can modify it fairly inexpensively for you and charge you for its use, especially if you're if your results are kind of lumpy. Let's say like the Super Bowl, where you were one big ad for the year. You may need a lot of servers for 2 or 3 weeks. If you were probably somebody like Intuit and you do tax stuff, maybe your busy part of the season lasts 4 months. Maybe you only need a lot of servers for 4 months. And, of course, you've got a lot of part-time workers. You can add resources on and take it off for them. So, basically, they are a giant IT department when you ask them. And they have lots of software and I guess it's if you've ever talked to anybody on the phone and you can tell they're waiting for the next page to pop up with a question to ask you, have you had your garage door fixed lately? How old is your garage door opener? All the stuff that is trying to elicit information from you to start trying to sell you something later. That just brought up because Sears, I was on the phone with Sears. They started bringing that up because they know that I bought a garage door opener from them like 8 years ago, and that's probably exactly how long they last. And they know to start beating on you and start sending you ads for new garage door openers every 8 years. Salesforce.com will put together that kind of software to know indicators when you should be contacted. They can set all that other stuff up too. But it's not just software for doing things. It's software for predicting things and knowing when the sales should go through. And like I said, so much of this stuff is duplicated from company to company that they can regurgitate a lot of the work they've done for other companies, put it into your software, and especially if you are only a busy part of the year, let's say you run a ski chalet, you're probably only busy 6 months out of the year. Maybe you don't need all the same kind of resources you need the other 6 months. And that's where these kind of companies really work out well. And, of course, they make sure to stop and help you with compliance. For all the changing legal issues. We're going to talk about another company that's very much like this in a minute, but we'll come back to that. Anyway, you can email me at path@tfnn.com, or you can call me at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I don't think anybody knows. Our engineer decided to play the theme from It's a Mad, 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 Mad World, and it didn't see it. I think it's a mad, 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 mad stock market, but what do I know? Anyway, we were talking about CRM, a few more comments in the den. I would say that their biggest problem has been Amazon cutting the server farm rates down to the bone. Salesforce has gone much more into adding value-added software, and why they've been doing well. The question is whether these companies are ever worth it, and whether or not after a certain amount of time that you just find whoever's the next cheapest to do the same thing. Probably not as easy as you would think. Also, Salesforce.com, Amazon, both are fairly big at putting barriers to entry for moving your data and your systems. Unfortunately, once you get started in a lot of these things, getting out of it's tough because Salesforce.com may be the only company selling the software that does exactly like that. Transforming and molesting the data, I'll use molesting as a word, to make it work in yet another system from yet another company. Not as easy as you would think. Of course, you got to find somebody to do that. But Salesforce.com down. Let's go back a little bit farther to what we have out here. Let's see, get it back. I mean, these guys took. Well, we even need to go back farther, don't we? Let's go back 3 years. Took a nice beating, mostly on those lower and lower rates from Amazon, but they started to come back a little bit. But you can certainly see that the volume hasn't significantly picked up in this big long run up here. It's been good, but it's this thing, could it pull back fairly significantly? Certainly back to around the $58 level. The reason I was bringing up CRM just seemed to work out was Workday, WDAY. I heard Tom O'Brien talk about this one in his show last night. And the reason I wanted to bring this thing up was, of course, a huge move, fairly decent earnings. This has been an IPO that just hasn't been out there that long, since late 2011. But great company. I wanted to buy it. I just never could find the signal in the Tech Insider to really buy this thing. There wasn't one day that really, and I was hoping to get back to this $55 level with heavy volume on April 10th, and probably we'll get back there one day, and I'll be able to buy it. But the reason I like this company so much was the people that run it are PeopleSoft, or the old PeopleSoft guys. And during the real tough days of, I think it was 2007 and 2008, PeopleSoft wasn't selling at a premium, and we had Oracle come in there, offer a little bit more money, and they scooted these gentlemen right out the door. Although they were running a great company, the market was just down at the time, and he did the corporate raider thing, threw these guys out on their rear ends that ran a fairly decent company called PeopleSoft. They restarted PeopleSoft, and it's much more like an ADP, the whole kind of human resources, getting paychecks out the door, making sure that your money's in for Obamacare, all the other stuff that you have to do for human resources, paying. But they had kind of a little different view on this, which I really liked, and it really applied to smaller companies. What they did was set all this stuff up. And where ADP takes all your data and they type it in, they do it all themselves. You just kind of hand it off to them. Workday is a little different. They set up all these systems, and your employees input the data, or you do yourself if you're in a smaller company. And the checks and everything just come out. What they are is a giant software company. Their software resides on the cloud. You just enter the data, and they pretty much handle everything for you on the other side. But you don't have to always make sure your computers are up to date. You don't have to make sure all the other stuff's right. All you have to do is make sure that they answer at the website when you're typing in new data. And this thing, I think, even when it was back, I almost bought this thing at the IPO, just because the pedigree of these two guys that are running it, and two, there was probably not a better, at that time, cloud-based opportunity with people that were proven results as CEOs and chairmen and presidents as the two guys that run this. Their names escape me right now. One guy's from India. The other guy's been around for a long time in, I think he was at ADP and then went to People, and then went as CEO of PeopleSoft. But it's been a long time ago. I just remember just how good a CEO was at PeopleSoft. Anyway, this thing's up, much like CRM. And, if this thing could pull back down and you see it, maybe it's going to take 6 months or something to come back to the 80s. But I would like this company long term no matter what. They've got all the check boxes off, their cloud services, human resources, ways of cutting a lot of your expenses down for your accounting. And a lot of people find out, especially in companies less than 50 people, that instead of 3 or 4 or 5 people doing their books, they can have one person doing their books and taking care of everything. And a lot of people, especially smaller companies, like that. So it is. CRM's 70% short the float, probably. Yeah. In fact, one of the other ones we talked about last night, Tom was talking about last night, and I IM'd them, was at JCPenney. Of course, this one's had a nice little pop today. It doesn't mean this company's out of the woods, and I don't think it is. Basically, the reason that you got 42% short interest is there's probably something bad going to happen to this company, and the bet is, and most of these people are short JCPenney at $25. This is not a Johnny-come-to-lately story. These people have been short this stock and had that high short interest for just about ever. I think maybe it went up about 5 or 7% here at this last gap down. So probably not seeing a lot of people with the heat. But JCPenney's just going to be like Radio Shack, like BlackBerry. These companies are going to just sit around and continue to meander slowly as they go out of business. The question with JCPenney is going to be probably mid-late summer when they go back and have to cough up and stick their hands out for cash. Is anybody going to lend them that money? So I'd be watching this thing. I wouldn't, with huge short interest, probably not a bad bet to go long and sell it today. But I certainly wouldn't own this. You're one press release away about them having to go back out, issue more shares, pay out the nose for some kind of warrants or something else for them to get cash because they don't have enough of it. And that's why you got a 40% short interest in JCPenney and why it will do stuff like go 20-25% in one day. Same thing with BlackBerry, and they will continue to put out these phony baloney press releases and on all these companies and try to find an ass for every seat. And that is, of course, a share, and they want some kind of retail client to buy it, being you. Just don't fall for it. If you want to trade it because of the short interest and for short squeezes, just don't marry this thing because the chances of them going bankrupt, probably 80%, maybe even higher. But that's what that short interest is telling you. That's what the short interest is telling you in CRM is that bad news is coming. Most of these guys, when you see that kind of short interest, it's institutional. It's not the retail investors listening to this show. And they know something very bad is coming, and they're willing to wait 6 months or a year before that happens. And every time we see these stocks that get cut in half, we wonder who is short those things. Normally, the problem is it takes forever for the watched pot to boil. But most of these guys, when it's other people's money, worried about it. They're more than willing to sit around and be wrong a few times for when these stocks get halved, or in the case of JCPenney, go to probably nothing. And when we actually look, we got a call. Brent from California. How you doing today, Brent?
I'm doing good, Dave. How about you?
Fantastic.
It's Duffield is the other partner in work.
Oh, okay. Do you work for them?
Yeah, by coincidence, my wife, she's a school teacher.
Uh-huh.
And they're all adopted children, but she taught her children at a school here locally. So.
Okay.
I happen to know. Before the company went public, I kind of knew about it. I get some shares before it went public, but...
Well, I wrote about this extensively and how much I love the company, and then I just never could find a good buy. When that hit that $55 low on high volume, I kept on thinking, I got an 80% chance it's going to come back and test that low, and it just never did. So I played the odds, and, of course, most of the time I'll be right. This time I was wrong. But I certainly liked this stock and wrote about it fairly extensively back at that period. But is that what you wanted to talk about?
I was ask you about this upcoming webinar.
Yeah.
Are current subscribers to Art of the Charts, are they going to be included in that?
Yeah, anybody that's got a subscription.
Okay, good.
So we've had them before. It's the same thing. Normally when we do these, to get everybody interested in the charts, and if you've not been through one, basically what I do is get a ton of stocks, and Tom and I kind of debate the relative measures of going through them. But most of them will be like ABCs. We did a bunch of confluence ones. We've done tests of highs and lows on higher and lower volume, and we're probably not going to have the same opinions because we don't like to trade the same kind of stocks. But you'll get a good idea of what we're looking at in those charts. And for the most part, we're going to agree on, hey, this thing tested the previous high on 25% of the volume. Probably not a good time to be going long something like that. Or if it did it at a low, probably a good time to look at and see maybe that's a stock I do want to go long on if it tests the bottom with lighter volume. So, it's that kind of stuff, ABCs, he looks at things just slightly different than I do. And so when we get to discuss them, I think a lot of people learn a lot.
I know I've at least got to watch the last one you guys had. Very, educational, so I'm looking forward to the one coming up.
Good enough, yeah. Everybody's invited. More the merrier.
Right. Good deal.
Thanks again. Okay. Yes, Joe is correct. Short squeeze. This is 8%. Okay. Oh, they're putting it in the den here. David Duffield, and former CEO of ERP giant PeopleSoft, and former PeopleSoft chief strategist, and in Bashari. Yeah, both those guys were at the time. I just remember. If you wanted someone to gush over somebody on television on CNBC, is drag those guys in, and all the people in the pundits would all swoon over those guys. And they just had a period where the stock didn't do much, and it probably would have done well, and stock holders being just a little nervous, especially at that horrible time. Right around the crash, were more than willing to take the upside from Oracle. And it was not easy. I remember that was a huge battle for them coming through. But these guys are, if there's anybody that's sharp as a tack out there, besides the guy that runs Oracle, it's certainly those two guys. So I like both of them. But keep an eye on that stock. There's other ones moving out here. See what else we have moving today. Oh, you can give me a call at 877-927-6648. And keep VZ. Had a question, VZ. Had a question in our email, and the question is whether or not we should be hanging on to Verizon and AT&T. I guess he's long. I guess Ron from Maryland says that he's holding on to these. I have no idea what price he's in. But basically, you had a higher volume test of the low out here. You've had some high volume moves. I can't see a lot of reasons to hang on to any of these. Energy's stronger than the last major leg down. They just don't look good to me. I'll look at AT&T when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, we're back looking at a few of these stocks in communications. Of course, a lot of these stocks, including, we'll get to Apple here in a second, kind of relieved that there wasn't any heavy-handed stuff coming from Facebook at Barcelona. A lot of these guys were scared to death after them acquiring the new software company last week. And I think Apple and Verizon and a lot of these companies kind of popping now that the convention is over and the possibility of bad news is also over. But we're looking at these charts. You're basically on Verizon coming back up into this heavy down day, and there's nothing in here that makes me think I would want to own that today. AT&T looks a little bit better to me, and the fact that you are down here testing these lows on lighter volume from that January 29th low with 83 million shares. So, to me, that would be something I would be more interested in buying or owning. The people in the den, a couple, think that Vodafone would be a better one. And if this thing could come back and fill the gap down to about 39.50, I'd say probably the same thing. It did break out. It broke out with volume and probably is a better looking chart out here. Wanted to look at Apple real quick. Of course, Apple sold off a little bit. A lot of people talking about their problems with encryption on their desktop computers. I just didn't think that was quite as big a deal. Apple did come back down to this gap up that it had, and the gap up had 12 million shares. Got into it yesterday with just a little less than 10 million shares. So not a big surprise out here, this bounce, but I have a feeling it's a relief bounce, that nothing worse happened for them over at Barcelona in the World Mobile Congress, which is all about mobile phones and mobile applications. A lot of people were afraid that maybe with the newfound power Facebook, they go after stuff. I still, if you haven't watched it, gave that link away about Facebook. I think that they were desperate to get into this new WhatsApp company, basically because I think that they see the writing on the wall for what they're already doing. And they're hoping that this is going to be some kind of equivalent to eBay buying PayPal, and the company they actually bought worth being with more than the company itself. I don't suspect it's going to be. These things just move far too quickly to be spending this kind of money. And I have a feeling that Facebook knows it. Apple itself, very light volume on the bounce so far today, so not expecting anything more than a test of 496 eventually on this thing. And back down at that level, we could take a look and see whether or not you want to own it. But right now, as we finish up the day, let me update and take a look at the volume. Just see what we're at here. Okay. 1851 up on 2.5 billion shares on the consolidated tape. Again, to break out, we're probably going to need 4.5 to 5 billion shares up here at these top, and that will be it. But I think a lot of these companies are cruising for a bruising, especially companies like Tesla and some other ones. I'm not going to be surprised if we see incredibly wicked action in a lot of these stocks up here at the very high volumes or high levels, and dubious articles and dubious press releases pushing them up here. But just in time for fun buying, and you shove a lot of people in these overly, hugely priced stocks. Wall Street has never been nice to those folks. Anyway, we've got Andy Heck coming up, and maybe he's got a new trade for you. Maybe he'll talk about it. We were talking about it yesterday when I was walking around the Target store. But he is next, and remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.